it going, y'all? Duncan Foster. Jax runs on Duncan with Berkshire Hathaway Home Services, Florida Network Realty. I'm here today with Meredith from Prosperity Home Mortgage. Meredith, you want to talk to them a little bit about who you are?
Yeah, so I am a local lender with Prosperity Home Mortgage. I actually service the Berkshire Hathaway offices here in Avondale and San Marco. I've been a mortgage lender here in Jacksonville for 17 years. And yeah, I'm excited to be here today talking about what's going on in the market right now.
Absolutely. We're going to talk a lot about inflation, a lot about first-time home buyers, and a little bit about some new construction loan stuff that you guys might want to take some notes on. We're going to be talking about a lot of awesome stuff. Here it is. All right, so Meredith, We're here today, market shifting, don't really know what's going to go on. No one has that crystal ball telling us, where the next market's going to be at in the next couple of months or so. Mm-hmm. What are you seeing right now in the market? Do you see a lot more first-time home buyers still wanting to get into the market, or are you seeing a lot of refis from investors, or what is it that you're seeing the most at the moment?
So definitely not a lot of refis. I mean, refinances have definitely, dropped off. There was, I think I have a note here that I've written down where, basically there's going to be $1 trillion less in 2022 in refinance business. So that, kind of tells you really what we're looking at from a refinance perspective. So most of what we're seeing is a purchase market. So definitely still a lot of first-time home buyers.
Absolutely.
I think primarily because rent is astronomical.
As we all know.
Yes.
Definitely, yeah.
So I do see a lot of first-time home buyers still very eager to purchase, and you can gain wealth by owning a home. We know that, historically. So they'd rather do that than give their money away. I always say
Absolutely.
The only person getting rich in that scenario is the landlord.
Oh yeah,
right?
Absolutely, definitely. So for those first-time home buyers, are you seeing more FHA, VA, the 3% down conventional route? Like, what is it that you're seeing as the most advantageous to these first-time home buyers?
So I really think a lot of the FHA, VA buyers were not getting as fair of a shake, if you will, in the market over, the last 6 to 12 months, honestly.
Absolutely.
I think that we're going to see a resurgence of opportunity in that area, and opportunity also for first-time home buyers again, because I think as the market is shifting, you're going to see more scenarios where sellers are going to offer concessions.
Definitely.
And that's going to open up a lot of opportunity for more first-time home buyers, and I think you'll have sellers who will be open to taking offers that will be FHA and VA again. Not to say that it completely, stopped.
Right.
But I do think it diminished quite a bit because there were so many cash offers and conventional offers. As far as first-time home buyers are concerned, we do have a program where they can put 3% down and go conventional, which is really awesome.
Definitely.
I know when I bought a house, my first house, I had to use FHA financing.
Right.
And FHA financing has definitely evolved as well, and not so much for the better in a lot of cases.
Absolutely.
There are some things with it. So I always encourage people, attain home ownership, whether it's through FHA financing or conventional, whatever you can do to get your first home. Mm-hmm. There's always opportunities to improve, and you can refinance into a conventional if you have to go that route at some point as well.
Definitely leverage the ability to refinance if you're ever able to.
Yeah, for sure. I had to do that, so it works out in the end.
Absolutely. There's a quote that I heard, I forget where I heard it from, but you date the rate and you marry the home.
Yes, I've seen that too.
Absolutely.
It's so true, because realistically, most people don't keep their loan more than about 7 years. Now that could be through refinancing, it could be, selling the home. But, it's not necessarily like you take out a 30-year loan. Doesn't mean you're going to keep that, 30 years by any means.
Exactly.
Yeah.
Exactly. So I know you're more of a hands-on lender, which I love and everyone else in the office loves. When we had all those multiple offers, you were the one that was calling up the listing agent saying, look, we've got everything that we need on our end to close. All we need is most recent pay stubs, because you have to have that update as soon as you go under contract.
Right.
The appraisal and any inspections that are needed if it's an FHA or VA loan.
Right.
are you still having to do that in this market? Are you still seeing that many multiple offers, or is it a lot more, 1 to 2 that you're competing with and you're not really having to get involved as much?
I think that, it depends on the area.
Okay.
I think that there's still many pockets in Jacksonville, St. Johns County, some areas where there are still multiple offer situations. As a lender, I think it's always vital to offer to call the listing agent.
Absolutely.
Regardless of the market, conditions, I think it's just a smart move. I don't think a lot of lenders do it.
No. Not very many. Not at all.
So, it is something that I think is important. Our process is really to try to fully underwrite a loan up front, which is not typical.
Right.
So we have that, program where we fully underwrite the loan before the person ever goes and looks at a house.
Definitely.
It's really something that I like to try to articulate with the listing agent, because they're so used to getting an offer where it's just a generic pre-qualification letter.
Right.
An underwriter hasn't put their eyes on that loan. They haven't, given the approval.
Exactly.
So I like to try to differentiate my buyer in that way. So even though the market may not fully necessitate it where you've got 10 offers on a property,
right,
I still think it's a smart move to do, to put your buyer, at the forefront of, that agent's mind. Like, this is what, this lender called me. That's the most shocking thing, is that the listing agent is so surprised that they're getting a phone call from me as the lender, honestly.
Absolutely.
But I think it's a smart move.
Definitely. And we always talk about differentiating yourself in the market, and especially with the market shifting, it's not just about realtors differentiating themselves. It's about lenders differentiating themselves too. So any lenders out there watching, take notes on that.
Yeah, and the other thing too that I think is really important to explain, especially if it's a conventional offer, is that we have our own panel of appraisers.
Right.
We got those names from folks like you and other agents in the office that said, hey, these are really good appraisers. And why that's important is because, when you're putting, an offer out there, you want to make sure that appraiser is coming from that market. And as a lender, we don't take a cut of the appraisal. We don't use an AMC, an appraisal management company.
Wow.
They're on our list. They come from the radius of the property, and they get paid the entire fee.
Absolutely.
And so it's really important part of the process to make sure that you get the appraisal right. And I think it's vital right now when the market is adjusting, whether it's going in this direction or that direction.
Right.
The market's adjusting in a different direction right now. And what you're going to see is when you have an appraiser who doesn't know the area.
Oh, yeah.
When the market's changing back maybe the other way, then you're going to have challenges.
Absolutely.
So it's important to have someone that is very qualified and is from that local area.
Definitely. And not using the AMC, you called it, not using that. I mean, oh my goodness, there's so many times I've used lenders where they use that AMC and we're waiting 3 weeks when it was ordered the day we went under contract, and they just can't find anyone to do the appraisal because they're not getting as big of a cut as they could if they were going on this route or that route.
Exactly.
And I think a lot of people overlook that.
Well, I think a lot of people don't understand when they order that appraisal, it comes from the zip code of the appraiser's home.
Right.
And so if you're going to pay that appraiser half of what they could get, you're going to have to, really go far out to get someone to accept that order.
Absolutely. And
even when they do accept it, their time frame is going to be much different than if it was ordered, through a lender like us where we're paying them the whole fee. So we don't have to go far out to get someone from the area.
Exactly. Yeah. That's huge. That is huge. Yeah. So kind of shifting gears a little bit, but not really at the same time. We're talking about the market shifting, and we're talking about everything that's going into this sharp rise. Granted, in the grand scheme of things, they're still low relatively, but the rise in interest rates, what is it that you're seeing that's fueling that? I know we talk about a lot, everyone talks about the Fed raising whatever it is that they raise every week.
Right.
I say that because not everyone knows.
No, I mean, a lot of people don't know what exactly that means.
Right.
So, as I mentioned in our meeting this morning, the Federal Reserve sets the Fed funds rate.
Definitely.
Okay.
Definitely.
First mortgages are tied to the 10-year treasury. They're two different things. Now, it's not to say that, when the Federal Reserve meets this week and they will raise rates, the Fed funds rate, doesn't mean that it won't have an indirect effect on mortgage rates. Mortgage
Absolutely.
rates could go up. But I think what most people think is that when the Federal Reserve meets and they say, hey, we're raising rates 3/4 of a point, they think that first mortgage rates went from 5.5 to 6.25, and that's
it's just like
not,
that, right?
Yes, and that's not what it is. I've been in this business a long time. I've actually seen, years ago where the Federal Reserve raised, the Fed funds rate, and mortgage rates actually went down.
Wow.
Now, I don't think that that's what's going to happen, right now. I think that we will see mortgage rates tick up slightly. What I think people need to understand is that in December of 2019, if you think back to, prior to COVID, rates in December of 2019 were 5.125 on average for a 30-year fix.
Definitely.
Okay. We got into 2020 and we had a worldwide pandemic.
Right.
And so the government stepped in and began buying mortgage-backed securities. Okay. And so just recently, the government has said we're no longer buying mortgage-backed securities. Okay.
Right.
So what's happened is, rates plummeted during COVID. We saw rates in the 2s and the 3s. We've never seen that in history. Nothing like that.
And we probably won't see it again.
I can't
the same
imagine.
circumstances happen again.
Exactly. Unless something major, happens. So with that being said, had COVID not happened, what is happening right now, we were expecting rates to go up.
Definitely.
I think what, consumers are having a hard time, digesting is that rates went up so quickly. They went in about 3-month time period from the 3s to nearly almost 6%.
Exactly.
And I can't think of any time in history that rates, have ever went up that much in a quarter.
Right.
So, that's what we're seeing is the government not intervening with the mortgage-backed securities and rates really settling, rising, if you will, to where they would have been prior to COVID.
Absolutely.
So that's what's driving it primarily.
Definitely. It's kind of getting back to that normalizing market. And everyone keeps on saying, well, the housing market's going to crash or it's going to do this. Well, it's like you said, we're just kind of getting back to that baseline that it was before everything happened.
Yeah, I think if you look at, mortgage rates over 5 years, 10 years, 20, 40, 50, whatever time period you'd like to look at, I think you would see average interest rates more like 7%.
Exactly.
So I think that we're inching, in that direction. I'm not going to make a prediction on what rates are going to do because I don't think anyone has a true crystal ball. I've always told my clients, I've done loans for economic forecasters for the government.
Oh, wow.
And they get it wrong. They're not always 100%, accurate either. And that's their sole job. Yeah. So I'm certainly not going to try to predict the future. I don't think hardly anyone would have predicted rates in the 2s or 3s.
Right.
So I'm not going to say what it's going to do, now to the end of the year or next year.
Absolutely.
I just know that they're probably going to be more in line with where average rates have been historically versus the super, super low rates that we've seen, in the short term.
That is probably the best answer I've heard to that question. Because so many people always want to say, oh, well, it's going to do this. And if, whatever the case may be, just being honest with you, with everyone out there like that, that just further solidifies you as the person that they need to go to talk to about this kind of thing.
Yep.
So I appreciate that, and I know everyone else out there will too.
Yeah, absolutely. Absolutely. Well, and I think the other thing that we didn't touch on that topic is inflation.
Right.
It's a big topic right now. We haven't seen inflation like this since the Carter administration.
Absolutely.
So
9% now, right?
I think it's 9.1.
Yeah.
So it's a big thing. Everything costs more. I mean, all you have to do is go to the grocery store to figure that out.
Exactly.
But it is a hot button right now, and I do think that this is going to help stabilize the industry as well in the way of what we've seen the last 6 to 12 months easily is that buyers really were at the mercy
of the sellers.
You know, and
absolutely.
I know for sellers, you know, that's wonderful, but most of those sellers need to buy a house. So it really just kind of, it needs to be more balanced is how I would, you know, describe it. If we can get more, you know, to a balanced market where both buyer and seller are really happy in the end, I think that's just a better market to be in, honestly.
Exactly. And we're moving toward that. I think it's like you said, we're inching slower toward that. It's not going to be tomorrow everything's going to be evenly balanced. It's like anything else, it's going to take a little bit of time.
Absolutely.
So something else that I know you guys have, which I think is awesome, and you kind of alluded to getting into this with the last thing we talked about, but there is a housing crisis overall in Jacksonville. We need more homes as it is everywhere.
Sure.
New construction definitely, absolutely can solve a lot of that. So I know you guys offer a great program for new construction. Do you want to touch on that a little bit?
Yeah, I'd love to. We just launched it just in the past couple of weeks, actually. So Prosperity Home Mortgage, we've always had a 6-month rate lock.
Definitely.
And it was something that I think a lot of people didn't take advantage of.
Right.
I think it's kind of like, I'm going to equate it to hurricanes here in Florida.
Yeah.
You know, if you're a Floridian, I think you get very desensitized to hurricanes, right? It's like, hurricane party, you know, that sort of thing. Well, probably the same thing happened with, you know, interest rates. So they were low for so long. And like I said, you really can't find almost any period in history where they went up in a month or a quarter.
Absolutely.
Like they did. So I think a lot of people just tend to roll the dice and think, okay, let's just see how this plays out, right? Well, for a lot of people, that did not work out so well. And I know many of those people that are in the middle of constructing. Well, on top of that, you have increased time frames to construct houses right now.
Definitely.
Okay?
Definitely.
I built my last house in 2012, and I think 6 months, you know, 8 months, we were beginning to end. Yes. Now they tell you 10 months, but it's probably going to be like 12,
13, 14,
14, right?
Oh,
I mean, technically you could probably have a baby faster than building a house. Let's just be honest, okay? With that being said, we had the 6-month rate lock, but what we found with what we just went through with the rising rates happening so quickly that it left a lot of people out there in a bad spot.
Right.
So we just launched a 365-day rate lock program. And it's really awesome. I've locked multiple people in this week, which is so exciting because, you know, it's really giving these folks peace of mind, being able to sleep at night for the next year while they're constructing this house, right?
Oh, yeah.
So the cool thing about it is, you know, you lock it in for the year, and then in the last 60 days, you have an option to do a one-time float down, and we do not charge you to float it down. So what I've seen with float downs, most companies charge to do a float down.
Absolutely.
They charge something.
Right.
We're not charging anything to do the float down. So in the last 60 days, if rates have dropped from, you know, where we locked you in, we will honor that and float your rate down. So I think it's just a really good product to kind of hedge, you know, what we're seeing in the market right now. And like I said, just give that buyer of that new construction home peace of mind, really.
Absolutely.
You know?
Absolutely.
Yeah.
And that's huge. I mean, just for me being in the market, that's huge because, you know, you're with this product, you're out there competing with Pulte's in-house mortgage and D.R. Horton's in-house mortgage. And they're going to say, well, we'll give you X amount in closing costs, concessions.
Yeah.
That's going to be offset by what they're going to save on the rate overall.
Absolutely.
And then some, honestly.
Well, and I explained to folks on new construction, you know, builders have their preferred or in-house lender because they want to control inventory. You know, it's really hard for them, you know, to honestly have to be at the mercy of every lender out there that can't get it done on time, you know.
Right.
Luckily, I work for a company that, you know, we close loans on time no matter what. We're always waiting on the construction to be done. They're not waiting on us. But that's definitely not the case for every lender out there.
Right.
And so that does put a lot of risk on the builder. So I understand, you know, both sides of it for sure.
Absolutely.
So it's really important to work with a lender that you know can close your your loan on time in every case, whether it's new construction or not, but definitely with the new construction.
Absolutely.
It's a really important thing. So
absolutely.
Yeah.
Gotcha. Well, last question, just really quick. What is it that you're seeing that you think is the best product that Prosperity has available for those that are getting into their first home? Because a lot of people are trying to decide, do I want to rent or do I want to buy? Jacksonville has, I mean, just looking yesterday, we've got at least 4 new multifamilies that are going up around the city.
Nice.
It's kind of putting pressure on people, do I want to move into a brand new 8-floor condo unit, or do I want to buy an actual home and not have to worry about my rate going up and down and whatever it is that's going to happen? So what is it that Prosperity offers to those first-time home buyers that you think is what's going to set them apart from everyone else when they're going to look for a home?
Well, I mean, from a product perspective, I think we have, all the products that a lot of lenders have, which are, your conventional 3% down, which is really a great product. I mean, I wish I would have had that when I bought my first house, truthfully.
Yeah.
It didn't exist then. You had to put more money down, when I bought my first house to go conventional. Obviously, we offer, FHA loans, which is another option. You can put 3.5% down. We also participate in all the various, state down payment assistance programs, like the Hometown Heroes that was just put out by the governor in June. Our VA product, we live in a military town, 2 Navy bases. Super proud of our VA product. So I've done a lot of first-time homebuyer, VA loans recently, and I'll get into why we're able to do that. But the VA product that we have, we basically waive all of our lender fees. We have like 2 fees that equal about $30.
Right.
But your standard like origination and appraisal and the big fees that you would have to pay on VA, we waive all of those. And we're highly competitive with, the big military lenders that are out there.
Right.
And we can close a VA loan in a matter of weeks. So,
awesome.
I think it's a very strong product in our market because you're going to have a lot of first-time home buyers that are military moving to Jacksonville, as their duty station. But to back up for a second, not so much a product, like a VA, FHA conventional type deal, but just our process.
Definitely.
So our process really is what I said earlier. We have a program called Buyer's Advantage. And Buyer's Advantage is where we basically get the client to apply, we collect their documentation, we submit it into underwriting, and we get basically the loan is completely underwritten. So you get what's called a commitment letter. Okay, a commitment letter is what the underwriter physically signs that says you're approved.
Right.
Okay?
Right.
So you get that commitment letter through that Buyer's Advantage program. And then in addition to that Buyer's Advantage certificate saying you're approved, we offer a $10,000 seller guarantee. So we're telling the seller, if we do not close on time, we will give you $10,000.
That's amazing.
So when you package all of that into one package of approved, $10,000 seller guarantee, and we also have the ability to lock someone's rate even if they're not under contract. So that's rare in our industry. Most lenders wait till you're under contract. We can lock you once you do the application before you ever go under contract. So you package all that together, and then in addition to that, you have a lender that calls that listing agent and says, hey, you just received, an offer for Mr. and Mrs. Smith, and let me tell you what's different about this scenario.
Absolutely.
I think when you package that all together, it really differentiates any buyer, but especially some of these FHA and VA buyers that, like I said, historically the last year haven't had as much opportunities I feel like they really should.
Absolutely.
So that's what I would say differentiates us as a whole.
Well, I'm sold.
That's awesome.
For what that's worth.
Yes.
No, that's awesome. That is amazing that y'all offer that. I mean, and the stuff that you're talking about, I mean, every mortgage company, or not really every bank, but every mortgage company is going to say, we've got this product, we're so different, and it's the same all the way across the board. And you guys actually offer something that's going to be beneficial to those first-time home buyers and those VA buyers. And when they connect the dots like you just did, that's kind of a no-brainer. Why would I not use them?
Yeah, well, I think, one of the biggest things about, Prosperity Home Mortgage is that we're wholly owned by Berkshire Hathaway.
Right.
So there's a lot of real estate brands that have a preferred lender.
Definitely.
Or preferred lenders. Mm-hmm. We're actually owned by the company.
Exactly.
And so what I explain to people is we have, it's not a small company. We are a mid-size, lender.
Definitely.
In the industry that has been around. But what's different is the hierarchy.
Right.
So I tell people this, and it is an honest to God statement. If I needed to call our CEO right now, if it necessitated it, his number is on my cell phone sitting right here. And I actually saw him this past week, and he's communicated that to me. Like,
right.
It's absolutely allowed.
That's awesome.
That doesn't exist.
Oh, no.
In most worlds, in what we do. And certainly, just the ability to get an answer for you as an agent or my buyer quickly.
Absolutely.
Is so important in what we do, and that's where we're different, and everything that we do is in-house.
Yeah.
So we're not, sending it to a third party to say,
right.
Hey, is this okay?
Exactly.
So it just definitely, helps. And plus we just all work together,
right.
as a team to accomplish the same goal. So I think that's important.
Definitely. Well, that's awesome. I got no more questions for you for today. Do you have anything else you want to talk about?
The only other thing that I had on my list here was really just, maybe talking about, adjustable rate mortgages. I think it's a scary term.
Right. Absolutely.
That I think if you were around, in 2005, when I first got into this business, very prevalent
mm-hmm.
to have adjustable rates during that time period. Probably attributed to the decline in the market because of the type of adjustable rate mortgages.
Definitely.
And I think that a lot of people don't understand the ARMs now.
Definitely.
So I wanted to kind of just talk about that just briefly.
Yeah, by all means.
So the adjustable rate mortgages back in 2005, and before, were what we called the option arm.
Okay.
So you had 4 payment options, okay? And this is how I describe the option arm. So payment number 1 was negatively amortizing. So
okay.
I consider that going backwards. You're adding to your balance if you
right.
make that payment. Next payment option was interest only, which you're literally just paying the interest, no principal. So I equate that to standing still.
Right.
Okay, so
right.
going backwards, standing still. And then you had the 30-year and the 15-year option. So
right.
4 options. Well, what do most people do when things get hard? They're going to pay the least payment that they can.
Absolutely.
Well, that's what happened, and then the market retracted. So it was kind of a double whammy.
Definitely.
The ARMs that we have today are 30-year amortized ARMs, meaning
okay.
you're paying principal and interest just like it's a 30-year loan.
Okay.
No different.
Right.
Where the ARM part comes in is that they're either 5, 7, or 10-year fixed periods. Okay? So you just depending on which one you pick, you might pick a 5-year fixed, a 7, or a 10. After those time periods, they begin to adjust based on the index. So it does become adjustable at that point. But for the first 5, 7, or 10 years, whichever option you pick, it's fixed and you're paying principal and interest. So it's not for everybody. Mm-hmm. It's just to be able to compare and contrast options to a buyer.
Absolutely.
So with rates rising, this will become more prevalent again. Not the option arm where you're going backwards or standing still.
Definitely.
But the adjustable rate mortgage, because if the average 30-year fix, let's say, is 6%, a 5-year arm might be 5.375.
And that's more advantageous.
And so
absolutely.
that's going to save someone X amount of dollars per month. Mm-hmm. Well, for someone who knows that that's their first home, mm-hmm. or maybe they move every 3 years, or whatever their situation may be, where it might be conducive to do a 5, 7, or 10 year,
right.
that's going to be a savings for them, and it will be more beneficial for them than getting a 30-year loan.
Exactly.
So just something to think about and consider. We've been in an environment where 30-year rates were 2 and 3 and 4%.
Yeah.
So there was no way you're getting an ARM
right.
when rates are 2, 3, and 4%. But when rates are 6 or 7%,
Absolutely.
it becomes more of a conversation piece to consider, how can I save money? And that might be an option for someone.
Absolutely.
So I just wanted to share that.
I love that. I really do. That's awesome. It's one of those outside of the box thinkings that, that's what we really, really need right now.
Yeah.
Absolutely.
For sure.
Well, awesome. That's all the time we got for today. As always, Duncan Foster, Berkshire Hathaway Home Services, Florida Network Realty.
Meredith Medvec with Prosperity Home Mortgage.
We service Jacksonville and all of Northeast Florida. Are there any other areas that you service too?
The entire state of Florida, believe it or not. If you're in Florida, I can help you buy a home or refinance your home if you need that.
Sweet. Well, yeah, thanks for joining us. Talk to you guys in the next one.